One of our panelists will remain on the stage as we turn our perspective a little bit to the role of market infrastructures in shaping the wholesale digital euro and a new era for CSDs. Please give a warm, still welcome, I guess, to Marco Kessler from SIX Group. And Marco, I think they are warmed up with you already. I'm happy to hand over the stage to you and have fun.
Thank you. Thank you, and well, hello again, I guess. So I'm here today for a keynote, and this keynote is without slides, so old school. I hope it will be interesting. And I want to talk about the new era for European CSDs. And speaking, as I said before, as SIX Group, we cover both the Switzerland, obviously, as a financial center, but also Spain, and therefore our presence in Europe. So let me start. Well, thank you for the opportunity to speak, and with a simple mental image. Europe is building two bridges and a road. The bridges, called Pontes, just heard before, will connect today's distributed ledger platforms to target services, so that we can settle in central bank money without waiting for a full rebuild. The road, Appia, is the long-term route towards a truly tokenized European financial ecosystem. Together, they anchor innovation in the safest settlement asset we have, wholesale central bank money in DLT. Keep that image in mind, because I will return to that at the end. Two bridges for immediate connectivity and a new road for the journey ahead. With central securities depositories and other financial market infrastructures acting as the interchanges that keep all traffic flowing safely and efficiently. We heard just before from the colleague from Adeline that over the last 18 months, Europe has moved from proof of concepts to market-grade experimentation, with, in 2024, the Euro system coordinating the largest exercise of its kind. 64 participants conducting more than 50 trials and experiments, settling or simulating nearly 1.6 billion euros in transactions across three interoperability approaches, the ones mentioned. The message from that work is clear. Tokenization in DLT can compress the asset lifecycle from issuance to servicing to custody, but safe settlement in central bank money must come with us into the digital world. On that foundation, the ECB's Governing Council approved a dual-track strategy. Pontes in the near-term bridge linking market DLT platforms to target services, with a pilot slated for the third quarter of 2026. And Appia, as a longer journey, a collaborative roadmap to design the tokenized wholesale ecosystem with a blueprint expected by 2028, subject to governance and consultation outcomes, obviously, which are currently in progress. So Pontes means we can connect DLT assets to Euro central bank money without forcing the market to pick a single technology stack. I think it's very important. It focuses on interoperability with Target 2, so T2, T2S, TIPS, so that participants can transact in central bank money with the operational, legal, and technical standards that we know. Appia looks further out. It addresses the governance standards and operating models needed, so we don't end up with dozens of incompatible islands. So think of Pontes as the working bridges to get the traffic moving, and Appia as the road that we will pave together as a market infrastructure, market structure, to make that traffic seamless at European scale. Now, if I think about what does that mean for European CSDs, the implications for European CSDs, I can think for CSDs about three implications standing out. First, the cash rails, obviously. Wholesale central bank money will reach DLT transactions, either natively on-chain, where permitted, or via synchronized models, reducing settlement risk while preserving monetary policy transmission. Secondly, programmability. I mean, we heard some good examples before from asset managers and treasurers and issuers. Issuance, delivery versus payment, coupon, and redemption can be, for example, event-driven and automated through smart contracts with control functions embedded by CSDs, supporting safe and scalable models. Thirdly, interoperability. The bridges to target and common standards under APIA mean DLT can scale pan-EU rather than fragment jurisdiction by jurisdiction or by platform. So let me bring this a bit more to life now with what we've been doing across Switzerland and Spain. First, in Switzerland, the Swiss National Bank Helvetia pilot has provided wholesale central bank digital currency on the SDX, SIX Digital Exchange platform since late 2023. This has operated in a production environment under central bank oversight, obviously, and we've supported multiple digital bond issuances, delivery versus payment settlement in wholesale CBDC, and even the first monetary policy operation was executed on-chain. In May 2024, the World Bank issued a 200 million Swiss franc digital bond, settling the primary leg in wholesale CBDC by the Swiss National Bank on SDX, while maintaining investor access through traditional custody via SIX-SIS, Euroclear, and Clearstream. And I think this is a powerful demonstration of digital cash working hand in hand with established post-trade networks rather than against them. I think it's very important for adoption, especially, to kickstart this properly. Now, secondly, in Spain, through BME-Iberclear, we served as a DLT market operator in the Eurosystem 2024 program alongside a broad group of Spanish custodians. Together, we tested full bond life cycles, issuance, secondary settlement, coupon, and redemption with delivery versus payment against Eurosystem cash models. Iberclear made a significant effort to lead an initiative involved in the Spanish market community with the aim of supporting its clients in understanding a new ecosystem that has now become a tangible and evolving reality. And those lessons can be carried now straight into the Pontes pilots. And thirdly, a pan-European integration. This is separate from the DLT work, but Iberclear, together with the LCH, is expanding settlement so that trades in Italian government bonds cleared at LCH will settle in Iberclear via T2S, targeting 2026. So when we think about, as I mentioned earlier, one thing is digital money, but the other thing is how do you employ it, how do you use it? So where does the value show up first, basically? And we feel a good case that was mentioned also earlier is the tokenized collateral and collateral mobility. So moving collateral in near real time with time precision, actually, more than just immediacy, enables intraday optimization, faster substitution, and better capital efficiency to basically leverage your assets much better than today. These are all practical wins for Treasury Desk and CCP-cleared businesses alike. Lifecycle automation is also a big topic. Corporate actions, again, coupon redemptions, and other events, even complex ones, voluntary events, can become data-driven on-chain processes, cutting reconciliation effort and reducing failure risk. Less effort, fewer breaks, faster time to cash. Another example are cross-CSDs flows at EU scale, at European scale. So as bridges to target mature, with initiatives mentioned earlier, CSDs can remain the account governance anchors while delivery versus payment flows travel across borders with central bank money finality. Innovation without compromising safety. Speaking of safety, we should also be candid about risks. Fragmentation is the first one that comes to mind. Multiple ledgers, multiple tokens, and no share standards is a recipe for duplicated cost. APIA addresses this explicitly through governance and standardization. But another area for risk is regulatory sequencing. The EU DLT pilot regime is evolving, and the proposed market integration package, MIP, looks to adapt CSDR and related rules so that FMI-grade DLT services can operate at scale. Raising or flexing thresholds and widening eligibility where risk allows. We must keep policy and market developments in lockstep, basically. I think it came out a lot during this morning's speeches that it takes both to work together to collaborate. And thirdly, speaking of risks and mitigants, it's operational resilience. Whatever the ledger, CSDs have to deliver neutral, supervised, and end-to-end control, data integrity, recoverability, and investor protection. That's our job in both the traditional and digital worlds. So what will we do with our partners over the next 6 to 12 months in the near future? Well, first of all, we will collaborate with Pontes and increasing our onboarding readiness. So we are actively and effectively supporting and contributing to the definition and testing of DLT to target flows and participant roles. So that's famous 90 pages document mentioned before, working in close coordination with the Euro system. Secondly, we continue the exploration of production level use cases. Together with William Banks, we will explore the use cases applying the tokenization of securities, for example, in the areas of event-driven corporate actions or tokenized collateral scenarios. These initiatives are designed not only to test feasibility, but to generate concrete evidence on how digital assets can potentially reduce failure rates and costs to serve, translating innovation to measurable market outcomes. I mean, especially speaking of Switzerland, now not so much on the Iberclear side yet, but on Switzerland, we have announced last year the integration of SDX into the broader SIX group, security services, and this is where we are looking at enabling tokenized securities at scale. So basically allowing all the assets which are currently held in the established FMI basically to be seamlessly tokenized and seamlessly accessed by the market without or removing the complexity of ensuring that an asset is tokenized at the right time and the right place, so to take over this complexity. Thirdly, standards and policy input, we are working on this as well. So building on hands-on operational experience we collected in Switzerland and Spain, we will continue to feed evidence, insights, and operational learnings into Appia's consultative work and related new rule-making processes. Under the governance frameworks defined by the Eurosystem, our objective is to help shape a future-proof blueprint, one that reflects how markets actually operate and ensures that digital assets are embedded into the financial system in a safe, scalable, and market-driven way. So in closing, as promised, I go back to the analogy, so let me finish where I began. 2 bridges and a road. In 2026, Pontes will give us working bridges between DLT markets and target services. Appia is the road we will travel together to a tokenized European ecosystem towards 2028 and beyond. All CSDs are the interchanges that keep the traffic flowing and safely at scale and open to all participants. Our commitment at SIX and Iberclear is to build and operate those interchanges, neutral, resilient, and interoperable, so issuers, banks, asset managers, and investors can adopt digital markets with confidence. Thank you. That's it.
Marco, thank you very much for your contribution. You have been part of the stage now for over an hour, and we are very excited to have you every time.